We are kicking off the final week of Q1 2023. We got some big data coming in later this week. The markets are hot this morning on news that SVB is being bought, and there is some, a little bit less concern around the banking industry. We'll get into all of that and more as we start up today's show. Please hit that like button, subscribe to our channel. Really appreciate all that stuff. Drop some comments. Nothing we say on this show is financial advice. We are a couple guys who love the markets, love talking about them. So please do your own research. Welcome to Money Never Sleeps. Kevin, it's a great Monday. We are back at it. Crypto is pretty flat, boring over the weekend. Took a little bit of a dip to start the day. TradFi markets are looking pretty good, but still hitting some key resistance. How are you viewing the markets as we start off the final week of Q1 2023?
Yeah, I'm not too surprised by the fact that we're seeing some green, mainly because of a lot of the banking concerns seem to be not fading away, but people feel a little bit maybe more comfortable. Nothing else has really capitulated. There's no banks that have really gone under since SVB, and we're seeing potential buyout. But yeah, I'm looking at the markets. I think we're seeing some profit being made. However, there's still some resistance that I'm seeing being hit. So it'll be really interesting to see how today closes out. Obviously, we're going into the end of Q1. We're starting Q2 next week. So it'll be really interesting to see how this quarter ends.
For sure. So the news that came out this morning, First Citizens Bancorp is buying Silicon Valley Bank. They're taking on $72 billion of SVB assets at a $16.5 billion discount. That's a pretty nice discount right there. That's going to make First Citizens a top 15 bank in the country, which is pretty wild. So their stock price is surging. A lot of other bank stock prices are surging this morning on this news. FDIC is going to be taking on some of the assets as well. So, a little bit more positivity in that market. But like I said at the top, and like you pointed out at the beginning, we're still seeing the S&P hitting resistance when it gets anywhere near 4K. It wicked up there real quick and then bounced right back down. We're seeing the same kind of thing on the NASDAQ, in the Dow, at some key levels of resistance. So you just can't break through it right now. The bears are still winning that battle a little bit. We'll talk about crypto as we get on. Do a quick look at the week ahead as far as economic reports that are going to help move the markets, because we're still at this stage where we don't know what the Fed is going to do next. We're not sure if they're going to go 25, if they're going to go no hike, if they're going to maybe view the SVB news as a positive and even crank it up to 50. It's all going to depend on the data that comes out between now and their next announcement on May 3rd. So this week on Tuesday, we have some more retail information coming around inventories, wholesale inventories, housing market data around price index. We're also going to get a consumer confidence score, which has been pretty interesting as of late. On Thursday, we get the final revision of Q4 GDP to wrap up Q1. So we're going to see what that final number comes in. And then on Friday, that's the big day. We have PCE, core PCE, personal income, and personal spending. So we're going to find a lot of information around the health of consumers right now, how inflation is going based on the Fed's favorite metric of it, the PCE. So a lot of stuff happening in the back half of the week. Friday is going to set the tone. And then next week, we keep seeing the numbers are going to roll in. The following week, we'll get some more unemployment data. We'll talk about that as we get to Q2. So Kevin, a lot happening in the markets. How are you feeling about everything at this point? I know that you've been bearish for a long time. The bulls are out taking their victory laps as we speak. Are you feeling ready to capitulate and turn bullish, or are you still bearish?
For the bears, for the bulls that are out there dancing, enjoy while it lasts. I can't tell you how long it's going to last. I do have an idea of maybe what we could potentially see. But yeah, right now I think that Q1 is obviously going to close probably green. I think we're going to get some bad data going into Q2 as we get some of those reports of how companies, businesses have been doing over the past quarter. But I still think that we're at a point where there's tons of liquidity way lower in all traditional markets. I think that we haven't seen capitulation yet. We might be in denial right now, to be honest, which is unfortunate because that's a lot higher than a lot of people were expecting us to be if we look at that one graph, that one chart. But for some reason, there's something in my stomach saying that, okay, we're going into Q2. These are the summer months. This is the beginning where, the volumes start to drop. Everything gets to get a little bit slower. People aren't trading nearly as much. And that might necessarily be a really bad thing, especially if we see a green close to Q1. People feel, okay, the banks are safe. There's nothing to worry about. They're probably not going to raise rates as much. And maybe we're getting close to a point where they're going to pivot. It's all about expectations, in my opinion. I think that we're going to see something where people are just going to wake up one morning. They take their kids to Disney World for the summer. If they're from the Midwest, they take them to the Wisconsin Dells. I don't know where you're taking whoever, but you're going to wake up one morning, you're going to look at TradingView, and you're just going to see a massive red candle. But again, I think that's possible. And over the summer that we start getting to that point. I think that too many people right now are expecting capitulation, and for that being the reason, I don't think we might see it until a few months down the line. Again, it's a matter of always getting people when they feel most comfortable, and I think right now maybe people are starting to get into that comfortable phase. We saw the fear and greed index was at 64 this morning, and that's pretty high considering everything that's happened in the past month. So I remain bearish. I think that there's still a lot of bear market to play out. We haven't hit some of our targets that we need to hit that we've talked about since before FTX. But we're getting close. End of the day, I think there's still tons of money to be lost in this market, and the prices are going to drop. That's my thought.
Yeah, I don't feel like we're out of the woods yet. We haven't seen the next thing that everyone's going to be talking about that I've already heard rumblings of is going to be around commercial real estate, how bad the commercial real estate market is. I'm not going to pretend to be an expert in that, but from listening to people smarter than me, that is where the next shoe could potentially fall. So we'll keep an eye on that. We'll see how that goes. I also think that, we're going to get to this point where inflation's still very high. Unemployment rate has to go up at some point. It's inevitable. And that is going to lead to a lot more, people, and especially, I think we'll especially continue to see it in tech, right?
Yeah.
As AI becomes more prevalent. So when people, my case, especially on the crypto side, is people who are in tech, who work in tech, are probably a little bit more crypto friendly. They probably have more of their money in crypto. That could absolutely lead to when job losses take place and they got to pay their bills, they have to go ahead and sell some crypto for that.
Yep. I mean, that's a fair assessment, 100%. It's just, again, like you said, unemployment needs to rise. And that's just a fact, that's just a symptom of raising rates. And, we need to go into technically a recession just for things to even out to, heal, because it's absolutely insane. Like I was telling you before the show, there's some companies where they haven't seen a bear market since 2008. Like you can say, okay, maybe there's a little bit of a pullback in 2018, but for the most part, it's been like absolutely insane gains. And a lot of these companies grew, and there's a lot of companies that have maybe people on their payroll that don't necessarily need to be on their payroll. I'm not saying they're worthless or their position's worthless, but maybe it's just one of those things where, okay, when we have tons of money, we have tons of liquidity, we can afford to pay these people. But, as times get tough and obviously interest rates continue to rise and we're not seeing profits come in, maybe we need to take a little bit off the top, and maybe we'll buy back some of our stocks so that, when this is all over, our value continues to rise. Again, a lot of these companies that are publicly traded, it's all for profit. Remember that it's not about like if they hired you and then they'll fire you, it's 100% for profit. They need to make sure that they're able to survive into the next bull and bear markets. So I think that we're going to see tons of unemployment, not only in tech. I think tech's probably going to be the biggest one just because it's so easy to eliminate people, especially after COVID. People are working from home. And as we talked about commercial real estate, the more layoffs that happen, the less people that have to come into the office. What's the point of having an office, renting out an office in San Francisco or renting out an office in New York? There's no point. So that's going to hurt the commercial real estate industry as well. So it's all intertwined. I think that we're just going to see unemployment rise over the next year or two. And it's just a side effect. Again, it's a matter of when this market just decides to finally go, it's for lack of a better term, tits up.
That is the perfect way to put it right now, Kevin, because it's heading in that direction for sure. Before we get into the charts, one final piece of news that I thought was interesting. We're seeing more and more countries slowly start to get away from using the dollar. And I'm very interested to see, I don't know what the long-term implications of that may be. It's not good for the dollar, obviously. We're seeing Kenya no longer, paying Saudi Arabia for oil in the dollar, right? So that's starting to take place. Same thing with Russia. When they're paying China. So we're seeing a lot of people, or not a lot, but we're starting to see some cracks, and it has me even more and more interested in other markets outside of the U.S. We did our show a couple weeks ago about the Asian markets. We'll touch back on that again. I'm seeing news this morning that China is continuing to make a bigger push to really emphasize their reopening, and that they want to welcome in foreign companies to come into China because they want to grow that economy back up. I think that we're going to reach a point where the dollar may not be the global reserve currency anymore. It's going to happen sooner than people probably think. This happens, right? Like, global superpowers don't stay that way forever.
Right.
So just something to keep in mind as you're looking at your portfolio, as you're trying to diversify. We're here to make the most money that we can, and if that means that we invest in some Chinese funds, whatever it may be, that's what we got to do. So something to keep in mind. Let's get into the charts. We'll start with the DXY. I know that's where you'd like to begin. We'll look at that. We'll we can look at Bitcoin dominance, because I got a feeling that number is still fairly high. So let's jump into it.
Absolutely. And just one more note on the Chinese, whether, obviously China's doing extremely well, and why they're paying people with Chinese dollar, or I don't know the exact name. Is it the yuan? I think it's the yuan.
Yeah.
Okay. Yeah. It's because in China, inflation's at 1%, and the United States it's at 6%. So that just pretty much gives a lot more countries confidence in that dollar, as opposed to the United States to continue to print. So that's just one thing to keep in mind. I noticed that over the weekend. I was like, you know what? Maybe we were early on the Asian markets, and there's tons of opportunity ahead. But let's get into DXY. Obviously it's been kind of a tough few weeks for the DXY. We've seen tons of dumping, and I think a lot of it, as we've said before, is just people are uncertain exactly what's happening. So we closed the weekly last Friday, and we had bounced off this 102.038, which has been historic support. You've heard us say it 1,000 times. And obviously we said that with the stochastic RSI coming down as little as it did, we're probably going to have a few more weeks of negative price action for the DXY. I still believe that. I don't think that's going to change anytime soon. If we look at the daily, we might see a little bit of downside. We see that we bounced off of it, we came to the upside, but we're still oversold. I think that we might test maybe this 103.69 at some point. But for the time being, the dollar is being a little bit sideways trading. It's in the zone right here. I don't necessarily think that's bearish at all. I think it's just resetting for a healthy move to the upside. I think the dollar is still going to have a lot of strength in this bear market as we move forward. And again, a lot of that comes in with how much we continue to do rate hikes. What the data comes in this week. If PCE comes in with another spike higher than last time, then I wouldn't be surprised if the dollar takes like infinity candle to not up that high, but somewhere like maybe like 4.64. The point is, the dollar is moving off the news. It's moving off sentiment, not necessarily actual technicals right now. I mean, we can still talk about it technically on the lower time frames, but when we see the dollar move, it's 100% off of, inflation came in higher. They're continuing raising rates. Risk assets are going to drop because people are going to want to make sure that they have money in cash. Right now, I'm not too worried about the dollar. I think we'll probably come test this 103.69 on the daily. But again, over the next few weeks, I am very, very much expecting the dollar to not necessarily drop all the way below 102.038, but I think a retest of that makes sense. I just think we just need to reset on the stochastic RSI. But a thing I will say this is on the weekly, we were overbought for a very short period of time. It was 1, 2, 3, 4, and then we came out. So 4 weeks as opposed to 2.5 months. I think that when we do finally get to that point where we're extremely high, we'll just see the dollar rip for since they overbought for a good amount of time. On the monthly for the dollar, still tons of room to the upside. So I think long term on this one, I don't think that we're necessarily gonna give up on the dollar. It's still way above the 50 and the 200 EMA on the monthly and weekly. So it's good to keep an eye on.
All right, let's take a look at Bitcoin. We just saw, as you were speaking, a pretty good sized dump on Bitcoin, down about 2.5% over the last 24 hours. Let's look at that now and kind of see what direction we think Bitcoin is going to go this week.
Yeah, I can see the red candle now. So obviously we're in this supply zone. This is kind of a weird pattern right here. If we look at the daily, it's kind of curving. They could be breaking out of something on the lower time frame. Yeah, we see a massive candle there. Pretty good candle here. We're testing right now the 50 moving average and the 4-hourly. It looks like there's still some room on to the downside on the stochastic RSI. That could just close right there at the 50, and then we find some support and ride it up. But again, we've been talking about the supply zone. This is a zone where, very similar to the S&Ps and Nasdaq and Dow, there's a resistance level, and it's 28.9. It's that $29,000 level. I think a lot of people are anticipating 30K, and psychologically that makes sense, sure. But I think that a lot of people who had Bitcoin at this point were buying when SVB collapsed, and they're just offloading it now. So I think that the people that are coming in now, as we see how low these volumes are, just on the 4-hour, let's go to the daily. Yeah, these volumes have absolutely been decreasing since March. What was that? March 13th.
That's a huge fall off in the last few days.
Oh yeah, 100%. That just tells
that
you
volume is just dying.
Yeah, and well, we got news today that MicroStrategy pumped the market. Apparently, they bought a ton of Bitcoin, and that could be 100% what this volume that we see right over here is. They bought I would be guessing it was, I think it was like $150 billion worth of Bitcoin or something of that like, or 150 million. I'm not sure.
So here, real quick, Michael Saylor, a couple hours ago, MicroStrategy repaid its $205 million Silvergate loan at a 22% discount. As of 3/23/23, MicroStrategy acquired an additional 6,455 Bitcoin for $150 million, an average of 23,238 per Bitcoin, and held 138,955 BTC acquired, about 4.14 billion, an average of 29,817 per Bitcoin. So a lot of numbers in there, but big takeaway: MicroStrategy still owns a shit ton of Bitcoin.
Yeah, and we tend to see them dump after they acquire a good amount. Like he was buying at 69K, and next thing you know, we're in a bear market. Again, that just happened to be when he also bought the top as well. But point is, that's probably what a lot of this volume is, because that's a ton of money being pumped into the markets. And I think a lot of that also comes with centralized exchanges. I think a lot of them were loading up. Obviously, we know that CZ had put in a ton of money after the collapse of Silicon Valley Bank. I forget how much. I think it was like $1 billion or so, putting it into like BTC, ETH, and forget the other one. I think BNB. But yeah, we saw tons of institutional players come in, and I think we saw tons of retail right around here. People were afraid that it would go to the moon. That's dangerous.
Yep. That's also, everything with Michael Saylor, him buying at the top, is a good reminder that even people who are perceived to be, brilliant, make a lot of mistakes. The biggest bullish case I can give right now on crypto is the fact that Jim Cramer has exited and warns that it's a gigantic con. So just something to keep in mind. That's probably a bullish indicator. We might see a pullback here on the daily, but maybe I'll just load up my bags and wait for it to pump, because Cramer has just been so backwards when it comes to crypto.
That guy, man, again, this is something that I tweeted about over the weekend. It's really easy for these people. I mean, the reason Jim Cramer has a show, and Jim Cramer and all these other people have tons of followers, is because they're promising you things that probably won't happen. This dude promises you the moon on so many stocks, obviously, like Meta. That was one he was like super bullish on. He was bullish on a Coinbase when it first dropped. There's tons of things that people get excited about and just buy right into. And even if he's wrong, it's like, oh no, it's still going to go up. And if it does go up at some point, he's going to be like, see, told you. So again, there's a reason why these people have, the space. They're not in the business of telling you the reality of the situation. They're in the business of, oh yeah, don't worry, you're going to get rich not having to do any work, just buy. So, take that with a grain of salt. I think Jim Cramer is definitely more wrong than he is right, but there's a reason why this dude still has a platform. And there's definitely a lot more bear market. Maybe he's right this time. Who knows? But for the most part, I think that Bitcoin for right here seems a little bit topish. It doesn't mean that this is the top, where I think that seeing the volume and the price go up at the same time, or volume goes down as the price is going up, that's not necessarily the most bullish case, at least on the daily.
Yep. Let's take a look at, we'll wrap it up today with looking at ETH. We also found out recently that the Shanghai upgrade is going to be taking place around April 12th. So I'm very intrigued by what the price of ETH is going to do there, especially as staking rewards get unlocked for those who have been staking ETH for years now.
Oh yeah, definitely. It's super interesting. Before we go to ETH real quick, here's the daily on the market cap of Bitcoin dominance. We're currently at 47.45. And just so you know, we have 100% volume coming down. Our volume is decreasing. However, look at the stochastic RSI. It's resetting pretty nicely. So I wouldn't be surprised if we do see another pump to the upside. It's holding strong up here. Maybe we come down to 47.11, but for the most part, I do think that Bitcoin dominance is going to continue to increase. And then against alts and everything like that, we see that BTC pairs are absolutely destroying alts. So just keep in mind that's a lot of the reason why we're not seeing tons of alt pump. But let's go to Ethereum right now, and let's take a look. So obviously, if we were looking at this this megaphone pattern here, go to the 4 hourly, it might be a little bit easier to see. And right now, it's kind of weird. We're just kind of hanging on this 50 moving average for the 4 hourly. The volumes have decreased considerably from the daily. It's very similar to Bitcoin. All this money came in here. Now there's not a lot of money. We're kind of trading sideways. But the daily stochastic RSI is oversold already, which is kind of wild to me because the volumes have been so low. So maybe it resets to overbought fairly quickly because the volumes are so low. That's very possible. I wouldn't be surprised by that. But I do think that we are going to have to break out of this pattern at some point. Again, when is that? Who knows? It could be when Bitcoin decides to take a little bit of a dump, but we'll see. 4 hourly, we're doing just like I said, the sideways trading, and then let's look at the weekly. The weekly, we are way overbought. We've been overbought for a period of time. Volumes are coming down to the weekly from here to there. Let's see how that plays out. We did see a pretty good dump today. We're at 1734, and last night we closed at 1775. So a little bit of a drop today. I think that we're going to continue to see some drops as stochastic RSI resets on the weekly. And if I look at this real quick, we've got a pretty good amount. We found some resistance right around here. This was resistance back in September and August, and it seems to be where it's hitting its head, right around 1789. So the 1800 level seems to be pretty psychological. It's also technical, like we're seeing that resistance is holding. Do I think there's a push to the upside? Sure, absolutely. Do I think it's going to go much further than 1800? I have no idea. I just think that a lot of this right now seems like it's extremely overbought, and as volume continue to decrease on the weekly, on the daily, that's a pretty good indicator that we are bearish divergence similar to Bitcoin, and that maybe the excitement, the fun, the liquidity that was being pumped into the market is starting to die off as people are taking profit. Again, it would be people who are buying way before those massive green candles that we were seeing here. So probably March, February, people were buying right around there on the 200 moving average.
Okay. Anything else on the ETH chart that you want to mention, or are we good to wrap it there?
I think we're good with ETH. I do want to check one thing real quick because this has been kind of interesting to me. XRP. So tons of people, again, XRP has just been taking missiles to the upside lately. It retraced pretty well, and then it came right back above today. We see that in the weekly. It's getting close to overbought. It'll probably overbought by the end of this week. And then on the daily, you can see that it just keeps pushing up. However, look at the volumes on the daily. Today, we saw a pretty good pump to the upside. We were at, let's see, the high of today was 48 cents, 49 cents. And the volumes are completely low. I think this one, very similarly to how we've seen Bitcoin pump up, is 100% institutional. I think a lot of people expecting that at the end of this month, we're going to get some news on the SEC case, are hoping that the case is settled or it finalizes. I don't believe that. I think this has gone on for two years now, that we're going to see this play out till, I don't know, maybe into the Supreme Court. There's been talks of that. But the point is, when I look at this, I see a lot of, not FOMO, but definitely a lot of manipulation with price. We've seen a lot of XRP being moved from wallets off the exchanges. Ultimately, that's going to bring up the price too, just because there's not enough supply on the exchange that could potentially be sold. So it's going to be really interesting. I'm not worrying or freaking out about any of these prices, especially when you see Bitcoin dominance. This thing is shooting up compared to other alts. So it's just something to keep an eye on. Not everything is as it seems right now. You have to really be careful out here. It's fun to be chasing gains. If you get caught holding a bag that big of XRP because you think it's going to end in a few days and you're going to scalp take profits. I don't know. It hasn't worked out for many people over the past 2 years. So that's all I'll say.
Okay, that is a good place to wrap it right there. Good start to the week. A lot ahead. Markets are going to continue to be volatile. We've been seeing that over and over again. I don't think that's going to be stopping anytime soon. We'll be back tomorrow. Another recorded show. I'm up in the mountains snowboarding, so life is good right now. A little time away to not stress about the markets is always a beautiful thing. So that'll do it. Thank you again for watching Money Never Sleeps, everybody. If you could, once again, hit that like button if you haven't, subscribe to our channel, drop a comment, share us with your friends, family, co-workers, the other parents at soccer practice, whoever. The more viewers we can get, the better. We want to try to help provide as much quality information as we can. So that's going to wrap it for today. We'll be back tomorrow, like I said. Kevin, any final thoughts?
No, just everyone have a great day.
All right. Remain patient, everybody. It's a long road ahead. We will see you next time.
Take care.